Hey, good afternoon, everyone. This is Sam, and I'll be doing the free video for January 29th, 2021. So this week we saw some pretty good chaos in the markets, oddly enough, sparked by the GameStop uh, cycle short squeeze, and it caused a lot of liquidations. It's a really fascinating thing that happened there where enough hedge funds were holding all of these highly shorted stocks, and as people piled into them, it forced the hedge funds to have to cover those shorts at massive losses. But in doing so, they also closed out longs so that they could finance covering back the shorts. So what we saw this week was basically arguably 2 days of liquidation, Wednesday and Friday today, where it looked like just pure liquidation. So be aware of that. There is that dynamic in the market, and it certainly could continue Monday. So caution is the number one thing that I want to urge to you here. There are a lot of red flags out there. A lot of levels were broken today, and frankly, if the liquidation stuff is still out there, that's going to put an incredible amount of pressure, on stocks because it's forced liquidations, right? They're not thinking, should I buy or sell? They're forced to sell because of what's going on with the short squeezes. So really, one of the most fascinating weeks I've ever experienced as a trader. I don't think anyone could have called that GameStop would be the one that triggers all kinds of problems in the market, but here we are. So, in the idea of caution first, I do just want to bring you one setup today that I think is pretty good, and it's a little bit of an outlier to the market, right? So, it's not Apple, it's not Amazon, it's not necessarily tethered to the indexes directly, and I think it can actually just kind of move on its own if the indexes don't flush, right? So again, that's the worry, but as long as the indexes stabilize, then I think this one's good. Now, what does that mean, stabilize? Well, for stability, what I would look for is just one simple trigger, something like SPX or SPY, and then getting a 30-minute 8 and 21 cross. And I think that would provide some stability to the market. You do not have that yet, so wait for your trigger. But the stock that I'm looking at here is going to be DKNG. This is the DraftKings. They recently had some pretty good news, but aside from that, they have a really good chart here. And even on a day like today, they kind of flushed a lot of different things out. You can see that it did end up holding support here across multiple different levels. So I'm looking for this to go higher as soon as the index is stabilized. So remember your trigger. But you have a very nice looking squeeze here. You still are holding the 21 as trend, and you're holding above 53, which is a major pivot on this chart. Inside of the daily, you have a 195-minute squeeze with a nice upward bias. And then on the weekly, you have a very nice trend here to the upside. So what I'm looking for here is a test, another test, and eventually a break of 58. Well, you got to get through 56 first. Then 58, and then once 58 gets cleared, there really isn't a lot between that level and your previous highs. So I would look for 60, just psychological level, 64, and then lastly, if it manages to get through all of these levels, and it will take some time, then I'm looking for 71 to 72 as a nice confluence of symmetry and extensions on the weekly chart. So on DKNG, you have a daily, a 2-day, a 3-day, I believe the beginning stages of a weekly, and a 195-minute squeeze within the context of trend in a stock that doesn't necessarily have to tie its fate to the indexes. And I like that. That's kind of what I want. So what's the game plan here? Again, focus on the indexes first because you need stability in the market. So something like a 30-minute 821 cross. Once that triggers, then I think that sets up the buy in DKNG, and I'm looking to take that into into the middle of February. All right, guys. Hope this was helpful. We'll see you for the next video. Cheers.